Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of company filings. And let me tell you, JIADE Limited's latest report might just have a few secrets tucked away in its numbers. JIADE Limited, a company based in China, has just dropped its report for the 6 months ending the 30th of June 2025. We're going to break down what these numbers really mean for the company's health and its future. Want more straight up, no nonsense financial breakdowns like this? Make sure you are subscribed and hey, join our Discord community. Link in the description below for more real-time discussions. So what is this report all about? Basically, it is JIADE giving us an update on how they're doing financially. They've provided their unaudited financial statements for the first half of 2025, comparing it to the same period in 2024. Let's dive straight into the numbers that matter. When we look at the financial statements, we see a lot of details. But let's focus on what tells the real story. For instance, in the 6 months ending the 30th of June 2025, the company reported certain figures that we can compare to the previous year. Retained earnings are like the company's savings account. It is the profit they've kept over time. For the period ending the 30th of June 2025, we see a specific amount here. Comparing this to the same period in 2024, we can see if the company is earning more and saving more, which is usually a good sign. If retained earnings are growing, it suggests the company is profitable and reinvesting in itself. Then there is additional paid-in capital. This is the money investors have paid for stock above its face value. When this number goes up, it can mean the company has successfully raised more money from selling its stock, perhaps through issuing new shares, which could be for growth or to cover expenses. And speaking of stock, we see information about common stock issued. For example, looking at the common class A shares issued, we can track if the number of shares is changing. More shares issued could mean the company is expanding, but it can also dilute the ownership stake of existing shareholders if not managed carefully. The report also touches on things like the over-allotment option, which is common in initial public offerings or IPOs. This gives underwriters the option to buy additional shares if demand is high. Its presence here suggests past IPO activity that might still be relevant to the company's capital structure. Now, let's talk about debt. Companies often take out loans to fund their operations and growth. We see mentions of various loans like one from Bank of China due in August 2025. Tracking these loans helps us understand the company's financial obligations and its ability to manage its debt. If debt levels are rising significantly without a corresponding increase in revenue or profits, that is something to watch. JIADE also provides insights into its customer base and potential concentration risks. They mention specific customers like customer C and customer B, and they talk about customer concentration risk. This means they're telling us if a large chunk of their revenue comes from just a few clients. If a major customer leaves, it could significantly impact their business. A healthy business usually has a diversified customer base. The report discusses revenue recognition with terms like transferred over time and transferred at point in time. This is accounting lingo for how they recognize revenue. For instance, services that are provided over a period might be recognized as transferred over time, while a product sold might be recognized at point in time. Understanding this helps us see how and when they report their earnings. There is also mention of assessable profits in Hong Kong, specifically for the first 2 million Hong Kong dollars. This relates to taxation and suggests JIADE has operations or dealings in Hong Kong that are subject to its tax laws. Looking deeper into the company's structure, we see references to various subsidiaries like Sichuan Kebiao Technology Company Limited. Understanding these related entities and their financial contributions or intercompany transactions is key to grasping the overall financial health of JIADE Limited. The report also notes these entities are in China. The company's primary operations and filings seem to be heavily centered in China, with mentions of Sichuan Province and the People's Republic of China. This geographical focus is important when considering regulatory environments and market dynamics. We also see distinctions between different classes of stock, like Common Class A and Common Class B. These can have different voting rights and dividend preferences, which is important for understanding corporate governance and shareholder value. When they discuss Common Class A and Common Class B membership, they are outlining the different types of shares that exist within the company. The report also details subsequent events, like those happening after the reporting period, but before the report is filed. For example, there is a mention of a subsequent event on the 15th of July 2025 and another on the 24th of September 2025. These are important because they reflect significant developments that could impact the company's immediate future, such as new agreements or changes in operations. We also see references to other entities like Wismas International Holdings Limited. These could be related parties, investors, or business partners. Understanding these relationships can shed light on the company's strategic strategic alliances and potential financial interdependencies. And of course, we have mentions of key individuals like Mr. Yuan Li. His involvement, whether as a key executive or a significant shareholder, is always worth noting in understanding the company's leadership and direction. When we look at the big picture for JIADE Limited based on these disclosures, here is my take. The company is operating in a complex financial landscape, navigating international loans, different share classes, and potential customer concentration risks. Their financial reporting with terms like retained earnings and additional paid-in capital shows they are a structured entity. But one has to wonder about the specifics of their growth strategy when they're discussing things like over-allotment options, which points to past capital raises. The significant mention of various loans indicates they are likely using debt to finance their operations, which is a common practice. But it is crucial to see if their revenue growth can comfortably cover these obligations. The focus on customer concentration risk is a yellow flag. If a few big clients are their bread and butter, any disruption there could be a major blow. This is a real risk that investors should be keenly aware of. On the positive side, the mere existence of these detailed financial disclosures suggests a commitment to transparency, which is generally a good sign for any publicly reporting company. A key opportunity for JIADE will be diversifying its customer base to build a more resilient business. The risks seem to revolve around managing debt and mitigating customer dependency. Alright, that is our breakdown of JIADE Limited's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description for more in-depth discussions and early access to our analysis. Thanks for watching. See you next time.